Good morning, good afternoon, good night. Welcome back. Welcome to. My name is Joe Josh. I go by iChart Daily. Follow me on X, the iChart Daily, for the latest and greatest thoughts that I'm constantly just posting out. This is not financial advice. In this video, I'm going to be giving you, once again, a window to my thought process on what I think potentially is playing out with Bitcoin. I might go into some alts depending on how long the video goes, but I just want to let you know, like, this is what I do, right? Like, I haven't checked the chart in, let's just say, a day or two because my alerts haven't gone off. And if an alert hasn't gone off, that means nothing's changed market structure wise, right? So I want you to think of it like you're sitting next to me watching me do this, like, from scratch, really, right? So I literally just opened up my laptop. I'm going to come to Bitcoin. I'm going to go to the monthly 2-month. I'm going to turn off my indicators. I don't want to see anything yet. I just want to see market structure. I want to see what's going on 2-month, 4-month, candle structure, etc., etc., right? So the first thing that I'm noticing is obviously the wave is coming down. And the most recent low is that 15,618 area, right? Previous to that was this one. Previous to that was this one. So as long as we come down and stop anywhere higher than 15,000, the 4-year cycle remains intact. And the first thing I think of is another higher low and then potentially another higher high eventually. During this cycle, I don't think so. The reason why I'm saying that is because then I start turning on indicators and I say, well, in order for this to break the all-time high, we need to be looking more bullish, right? Golden cross structure on your MACD. You want to see the RSI above the moving average making higher highs each swing high and low. You want to see the stochastic as well in a golden cross structure above the 50 and above the 80. I'm seeing top visuals. I'm seeing golden cross structure, the RSI breaking below the moving average. I'm seeing the stochastic break below the 80, and when those three things happen, regardless of the news, I know certain things should be and have a high probability of playing out. And what that means is we're entering a bear market. It's very simple. We're extremely oversold, right? So I do think we have potential for a dead cat bounce. Follow me on X. This is why I said potentially we could go back to like that 80, 75 to 80,000 level. I'll explain why. I used multiple charts, right? This one is Bitcoin on the Bitstamp exchange. The reason why is it shows me a very long amount of data from 2011. I'm also going back and forth between the BTC1 chart on the CME exchange because this chart shows you gaps. Gaps happen when the exchange closes, but Bitcoin is an asset that trades 24/7. And so when I see a gap, I'm making a checklist, right, to see what's bullish, what's bearish, what has a high probability of going back to. So that gap gives me a visual and an understanding that that price right here should be retested eventually, right? Now you can see this last dead cat bounce, this last bear flag, we had like a nice 20-something% return back to moving averages, right? And we are so oversold compared to where the moving averages are. You could see that the moving averages are now lining up with the gap, right? And the first thing that I want to look at is, are we forming any type of hidden bullish or bullish divergence during this market structure to help me understand that the short-term bottom, like this short-term bottom, is forming, right? And what I do is I look at the daily, the 2-day. I'll start probably with the 12-hour, just to see like when the golden cross is, where the RSI is, because there's certain things that I need to see visually in order for me to say that the asset is going up or down. I don't look at the news, I don't look at adoption, I don't look at if we're going to war and it's a hedge against inflation. I am trading. This is my trading bag. Long, short, long, short, long, short. I have multiple bags. I have bags that I will never touch for my children based off of the news that I have researched for the past 11 years. ISO coins, Chainlink, XRP, XDC, stuff like that, that I know have a position in the adoption infrastructure that crypto will have over the next 10, 20, 30, 40, 50 years. Um, but, but I'm not looking at a news article and then saying, okay, now is a good time to dollar cost average. I go to the chart. So back to the chart, I'll start with like the 12-hour, and I want to see if the indicators are in section A or B. On a MACD, that's above the 0 line. On an RSI, that's above the 50. On a stochastic RSI, that's above the 50 and or above the 80. As of right now, the RSI remains below the 50 line, so it's going to have a hard time breaking the moving averages. The next thing you need to understand, in order to see a bottom and understand that a bottom is happening, you need to let it play out. We needed for this 25 days of you doing nothing but sitting on your hands, understanding what the waves are now doing. And this is on even a bigger scale, right? From this wave to this wave, I'm talking about from here to here is 80 days. I need to see, are we forming the same low on the MACD, a higher low on the MACD? And you can see the price made a lower low. We went from 82,000 to 60,000, but your MACD made a double bottom at the negative 6614, right? That right there tells me that this could be a nice move to the upside, right? Because this is going down, okay? And this is going sideways, okay? Now, to go back to the longer time frame, you could see here, we go below back to the moving average. We're below, we could go back to the moving average. If you go back to the moving average, we could go back to the EMAs on the 11 and 21. So once again, I'll go to the 2-day. Let's delete everything, make it nice and clear. I'll go to the 2-day and I want to see, well, when is there going to be a golden cross? When does the RSI look like it's forming those higher lows and breaks above the moving average and has room to go back to the 50? So I'm looking for momentum, right? So the MACD is the momentum indicator that's telling you that it's on your side, but I'm understanding that it's a dead cat bounce because we're still below the 0 line. So showing me we're not breaking 98,730, but we could definitely do something like this, right? And go back to here and break the moving averages a little bit. Someone asked me a while ago, what's the best time frame to use? It's the one that you could bet with that shows the least amount of fake outs. So it's the longer time frames, but the shortest of the longer time frames. I like the 2-day, the 3-day, the 4-day, because when certain things play out on these time frames, it's a good swing trading time frame, right? Because we broke above, we broke above, we broke above. This gave me the option. If you remember, it was like 90,000, 91,000 to the 93, 94,000. I made 5%, 6%, but on a 3-4x leverage, you're making 20 to 30%, right? So once again, that's all I'm looking for, right? I'm looking for the double bottom on the price. You can see here the double bottom on the price, and you can see here it's forming the double bottom on the price. Now we're looking for the RSI. The RSI made a higher low while the price made a lower low. I'm talking about this and this and this and this. And this made a higher low as well, showing me that a potential move is coming. So in order for me to open up this long, you can see this range here, right? We're at 65,755, but we're going to see resistance here at the 70,000. So your short-term play, right? Short-term play, make sure your stop loss is below the 60,000 as of right now. If you want to keep it even tighter, stop loss is below this low, the 62,690. Play is here, and the risk reward just back to resistance right now is 1.44. So you're looking at a 6.8% return with a 4.7% risk. If you're using 2-3x leverage, you get my point. Now, this is short term. We're looking for the longer term and to fill this gap right here. right? Potentially a wick above. And this is where you'd want to set um, take profit levels, right? So you're looking at 20% to 24% with a 4% risk, and I would do like 20 to 30% at 69,000, 20 to 30% at 72.7, and then 20 to 30% at 75.5, and then you got like 60% to 70% profit taken, right? Because you understand that this potentially could be a dead cat bounce, and we could come back down to the 60,000, and all these profits are then wiped. And I would leave like 10 to 20% to fill the gap. And once it fills the gap, if we see a wick, then you know um, this is potential, right? That you have larger bloody moves during a bear market, right? 56% down, but 20 something percent up, right? You had 40% down, but I'm talking about a 20% return. And once again, everyone looks like a genius during a bull market because you could just keep the position open and you'll never get liquidated. Or you could buy at a short-term local top and you look like a genius because we went from 50 to 63. We went from 63 to 90. Now, my friends, you gotta know what the hell you're doing, because if you do open up a long right here and it does go up and you didn't take profit, and then it's the probability of us going back down to 60 or potentially even lower, right, to 61 or even lower, that money that you just invested is gone, depending on how much leverage you're using, and then it doesn't even, the play is over. Now, one thing that I was noticing, I posted on my X, let's turn this off, right, that we are bouncing right off this liquidity level of the 60,455. Now, the reason why I use multiple levels, because when I turn to this one on the same time frame, the Bitstamp one, the major levels that I'm seeing is lower, right? The major levels I'm seeing is 50,000 to potentially 52 to 50,000, right? So that shows me, like, could this be another one of these? We do this, we see resistance from this level here, right? And then potentially come down one last time, then come back up, do this double bottom, like this inverse head and shoulders, and then do something like this, right? Closer towards the end of the year. So as of right now, it doesn't look good, right? The longer time frames are just forming. I was telling one of my close friends the other day, this is another visual, right? We're so oversold compared to the moving average on the monthly RSI that we could have a dead cat bounce, form a lower high, and still form like a double top. Like we could have 3-4 months of us going back to 90,000 and forming a lower high on the RSI, a lower high on the stochastic. The MACD is continuously coming down, like something like this, right? I mean, Bitcoin went down 69% and then went up for 3 months 84%, right? But formed hidden bearish divergence on a 2-month time frame, which takes months to play out, right? Bitcoin fell down 55, 60% and then recovered from 1, 2, 3 months. I'm sorry, this is 6 months, 140%. But during that time frames, the indicators were still forming bearish structure, right? Coming down, coming down, coming down. So with that being said, we're so oversold. I could see it's going back up. I could see the news manipulating people's emotions. Us even going back to 102,000, right? We could even do that, bro, right? And especially I've been saying, so stupid. We could do something like this, right? Fill that gap and then blow past it, and then all of a sudden people are like, we're going to the moon, bull market's back on. And we go back to these levels of 100,000, but form a lower high to this one, and then once again we could come back down to the 60,000 and wipe everyone back out, right? I don't chase green candles. I buy at support in order to take profit at resistance. That's a rule that I've said thousands of times in these videos. Another thing that we were looking at is Bitcoin's dominance, right? I'm always looking at Bitcoin's dominance because Bitcoin's dominance is doing the same thing I just told you. Okay, Everything has a chart. Even you have a chart. Are you making higher highs and higher lows in your own life? Or are you making horrible decisions and your MACD and your RSI are entering section B? The point I'm trying to say is this is Bitcoin's dominance. Why does it follow technical analysis? Why could I use indicators on Bitcoin's dominance chart? I don't know, but it works, right? So the point I'm trying to say is Bitcoin just did exactly what I just told you. Bitcoin's dominance just did exactly what I said potentially could play out chart-wise with Bitcoin, right? You have the run, you have the consolidation. The most recent pump up doesn't do anything. It's like there's no momentum, there's no volume. And then all of a sudden, this takes, right? This took 273 days in order for it to form a lower high, the MACD to continue coming down, the RSI to continue make a lower high and be rejected below the moving average, the stochastic to break the 50, get rejected by the 20. Almost a year you had to wait for this to play out to then say right now confidently the Bitcoin's dominance is coming down. And then you want to say, right, you come up with the technical analysis and then you say, all right, where can I set alerts? Where is there visual liquidity that I can, no, I don't want your upgrade. Where's there liquidity to help me understand that if we break this level, we could go to this level? And then I say, well, 57.36, it seems like if we break that level, we're going to this level. And if we go from 57 to 52, and potentially lower, right? Major support's down to 40. But if we do that while Bitcoin's going up, even back to 78 to 82,000, your alts are going to have a heyday. Your alts are going to have the heyday because your alts are so oversold, right? This looks like a falling channel, right? This is XRP. Right, this still needs to form, but I could see it playing out. Why? Because XRP is down and was down 70%. Right, I was looking at Doge the other day at 8 cents. Right, and I laugh because if you were fooled by the Elon's taking a Tesla and he loves Doge. Like, this is how old I am and how long I've been in this game that I've heard that story I don't know how many times, man. Like, this is before he bought Twitter and he wasn't even involved with crypto and he was some interview on the street and some kid was like Doge and he was like, yeah, that would be funny if it went to the moon. And that's why people bought Doge, not because the chart, not because of the market supply, not because of the market cap was nothing here, and Doge and Shiba did the same thing. They went to 20 something billion. Like, we need sheep, bro. That's all I'm saying. So anyway, with all that hype, Doge formed a lower high on the macro level. 76 cents, 48 cents. Major support is at 5 cents. It's touched it back in 2021, 2022, 2023. We'll see if we have one more major correction out of Bitcoin and we break this level. You can see I just said I look for major liquidity levels, and you can see this major liquidity level here of, let's just say, 0.081 to 0.096. I could see it stopping there. If it stops here, then we could go back to 15 cents to potentially 20 cents. And the point of me going to an altcoin is your return, right? 81%. Just going back to these highs here, 150%. And even if it was to go back and form a lower high, right? I'm looking for a lower high on this macro swing that eventually will happen. Right? Because this is a high, this is a lower high. And if we do something like this, or if we do something like this, right? And then the next high is somewhere over here, it's still a lower high on the macro. But the point I'm trying to say is this is 50 to 150% reward. And as we go back to Bitcoin, you're looking at what? Right? 20, 30%, right? If it goes from here Even the blue line, if it goes from here to here, is 30, so potentially 50, 60%, right? 30, 40%. So we got to play our cards right. If it's very hard and difficult to trade an alt because you got to look at Doge and then you got to look at Doge versus BTC to see if, well, look at that, right? Doge is absolutely bleeding versus Bitcoin since 2022. And if Doge starts forming any type of hidden bullish divergence versus Bitcoin, as you can see, making higher lows each time, I'm curious to see if we break the 50. If we break the 50, we have a high probability. I'm talking about the 50 line on the RSI. We have a high probability of breaking this level here. If we break this level here, then that would be, nice for the long term. And then momentum would be changing on this. You'd have room to grow back to these levels. Right? 30%. 3 week, same thing. Back to these levels. 70%. And this is how I line it up. But you got to look at two charts and understand that Bitcoin needs to go up. Bitcoin's dominance has to go down. Doge or whatever alt versus the dollar needs to look good. And then whatever your alt is versus Bitcoin needs to look good. And then you got all the confluence on your side for your alt to do 80 to 150%. And that's really the video, right? I mean, it's a rinse repeat type of process. I'm constantly looking at market structure. I'm constantly looking at indicators to see if divergence is playing out or if it's a continuation pattern. Are we making higher lows and higher highs on both the price action and the indicators, or are we making the same lows, are we making the same lows and the same highs while your indicators are forming bullish structure and momentum is changing the other way? That's really it. Love you guys. Appreciate the support. Hope you learned something from these videos. Because once again, it's the same thing over and over. If you're looking to purchase my indicators, I don't usually turn them on all the time when I'm doing my technical analysis because I know the divergence is happening because I'm already going through it. But this is a divergence market bottom, market top indicator that shows you that more than usual volume is coming in when the candles turn hollow, and more than usual volume is coming out when the candles turn white. It helps you understand like tops and bottoms. And then the numbers is a live indicator that helps you understand the amount of indicators showing you divergences. If it's on the top, it's bearish. If it's on the bottom, it's bullish. So you can see here we had a double bottom with 8 and 5 indicators showing you bullish divergence, and then you had one indicator showing you bearish divergence with your market top indicator. You can see the candles are hollow with a 5, so you line that up, and if we start seeing a 1, 2, 3, 4 here, then that gives you more confluence. And then I love my 11 and 21 day moving average, which is an RSI reader as well. Depending on the time frame that you are looking at, the 11 and 21, you could also add the 7, but I just keep it the 11 and 21. It turns white or pink or whatever colors you choose, depending on if the RSI is above or below the 50 line, which is a key indicator that helps you understand if remains pink, right? It's all visual, right? So we're having the double bottom. If we go up and you start seeing the white candles on the midterm time frames, I wouldn't use it on like a 2-minute, right? Because there's a lot of fake outs showing you that you're overbought, you're at the moving averages, they're pink, showing you that this could be a dead cat bounce and rejection and a lower low, and it played out perfectly. And on longer time frames, you're literally like predicting bull and bear markets on the monthly and the 2-month, right? I mean, if you just wait for it to turn white, you're good. We're turning pink, it's the start of the bear market. It's just, it is what it is. That's the video. Love you. Appreciate the support. If you appreciate these videos, leave a like. It would help greatly. If you're interested in suggesting the next topic that I talk about, leave it in the comment section. I'm very curious to know what you guys want. And yeah, that's it. Love you. Enjoy.